Good afternoon and welcome to today's webinar by Bowen Coking Coal. Thanks very much for joining us in this first webinar. Now today on the line we have Nick Jorss, Executive Chairman, who I'm sure is known to many of you, and also MD Gerhard as well. Thanks guys for coming in today. Now just some housekeeping. Today's event will be about 1 hour bang on, so try and keep it to the 1 hour. You've already had a chance to submit questions. If you've got more questions during the event, by all means please submit them via the chat, the control panel. So we'd love to have your questions. If you've got any more questions during the event, please send them in. We'll do our best to answer as many questions as we can during the 1 hour. If we don't get to your question, we'll try and get back to you personally later. So please bear with us. We'll try and get to as many questions as we can. Recording's been made today, so if you miss out on the event today, you will get a chance to watch it again later. So first of all, just a quick poll to see how many of our shareholders are on the line today. If I can find out. And we love our shareholders, so I'll just send you a quick survey. Okay. Are you a Bowen Coking Coal shareholder? Yes, no, was previously considering investing. So all good questions. Just seeing how many shareholders out there on the line today. Getting a few responses already, which is great. Maybe just give it a few more seconds to run through. Nearly everyone's voted, just about. A few more votes. Oh, look at all these shareholders. Thanks very much, everyone. Okay, I might just close it off now. Thanks for voting. And let's look at the results. So, about half of you are shareholders, which is fantastic. We love our shareholders. Thank you. And a few were previously and some are considering. Great. Well, hopefully today convinces you to invest. Although, of course, full disclaimer, no financial advice being offered. So I'll just close that poll right now. Thanks you very much for voting. Now, you've heard enough about me already, so I'll get you on to our presenters. First up today, we have Nick Jorss. I'm sure most of you already know the story about Bowen and Nick. Bowen on the ASX is BCB. Nick Jorss, ex-Stanmore Coal, track record of creating enormous shareholder value. So I'm sure most of you know Nick already. And now I'd like to switch over to Nick to take the reins, and I'll share the presentation too. Thanks, everyone. So starting to share. Okay. So just kick off the presentation. And Nick, if you'd like to kick off. And unmute yourself, Nick.
Sorry, let's try again. Thanks, Anthony. Is that better?
Yep, that's better. Thank you.
Thanks, everybody, for coming along. Great to have you on the line. We want to chat to you today about Bowen and about this acquisition in particular, which is the acquisition of the Burton mine and the Lenten project. This is, as I think we say, is a transformational deal for Bowen and for Bowen shareholders. It sort of propels us into being a significant coking coal producer over the coming years and for quite a period to come. That's a place we've sort of wanted to get to for a while, and this is probably the acquisition that's going to make us into a meaningful producer. I might say start by saying that that photo there is a shot from, I think, November last year when we were on site having a look around. This, like all good things, this one took a while to sort of to get the deal done. I think almost to the day 2 years ago is when we first approached New Hope to ask them formally whether they would consider selling us the asset. So it's taken a bit of doing, but you know, as I say, all good things come to those who wait. So what have we bought? We've bought a 90% stake in the Burton mine and the Lenten project, which sits adjacent to that. That includes the wash plant, which you can see a part of there in that photo, capable of taking 5.5 million tonnes a year of feed, a train load out, accommodation village, a haul road, basically a full set of infrastructure. And the other 10% holder is Formosa, a very reputable joint venture partner, a very large Taiwanese company that we're very pleased to be entering into a business arrangement with. So we've signed a binding term sheet now and announced that and raised some money on the back of that. And then the next sort of 3 or 4 months, we'll work through the detailed documentation and get that to completion as soon as we can. On top of that, I guess last week we announced that we were the preferred bidder for the Bluff PCI mine, which is down in the southern part of the Bowen Basin. And that's a interesting exciting little PCI mine, which is something we can sort of turn back on reasonably quickly. It was in care and maintenance, or it is in care and maintenance, but all its approvals are in place, and as I say, it's ready to go. We'll go through this in a little bit more detail, and Gerhard will take you through some more about the acquisition and then the projects, but this is quite complementary to our existing assets. So we've got Broadmeadow East, which was our sort of flagship project prior to acquiring Burton and Lenten. Broadmeadow East was part of the original Burton project and just an unmined pit. So it becomes now a satellite pit of what we're calling the Burton complex. Isaac River as well, which is a small met coal project next to Dornier, is another one that we're very close to getting our approvals for. So both those, Broadmeadow East and Isaac River, are very close to production. And we're expecting to do roughly 1.5 million tonnes of ROM between those. But all up now that with Burton, we're targeting over 5 million tonnes a year in sort of sustainable production. And that's before we consider anything that might come out of Bluff, should we be successful in that as well. We've got a series of other projects sit behind that, Hillalong, which Sumitomo's farming into. They'll own a 20% interest in that. They're funding the exploration. We've got some great results there. That again can feed through the same set of infrastructure that we're picking up today at Burton. The management team, we might just flick on to the next slide, Anthony. This is the board. Yeah, I guess I'd just say between us, we've got a history of opening coal mines, operating coal mines. I'm probably relatively new to the game relative to some of these guys, but between us, I think we've opened 11 coal mines and operated 25 worldwide. Myself, former Stanmore founder and managing director. Gerhard, who's on the call today, is the MD and the founder of Bowen, and he's had a fabulous career in Exaro in recent times, and part of that's been not only working on operating mine sites, but also identifying opportunities for them to acquire in Queensland and the Bowen Basin. Matt Lattimore is probably one of the best coal marketers around in Queensland, and we're very pleased that he's heavily invested in Bowen and also working with us now with the marketing joint venture we've got to sell the coal at the best price possible. That's probably just digressing a little bit. That's a big difference to what happened at Stanmore, where we sort of didn't retain the marketing rights, whereas in this we've got the 50-50 JV with Matt's company, M Resources, and there's a lot of value we want to drive out of that arrangement. Neville Snedden, very experienced mining engineer, former CEO of Anglo, former chairman of Dalrymple Bay Coal Terminal, and former chairman of Stanmore Coal as well. And Blair Sargent, who's got a history in small resources, but also instrumental in the Coal of Africa story. On top of that, Darryl Edwards is not on that list, but is our CFO, and he's on the line as well. And Mike McKee is our Chief Operating Officer, who was also with us at Stanmore. Thanks, Anthony. Just in a summary sense, a high level, I guess, what are we acquiring? What's this transaction about? High quality coke and coal mines for low upfront cost. We're picking up the plant and the infrastructure I mentioned, which has a replacement value estimated at least 300 million Aussies. Needs a bit of a lick of paint or a bit of a refurb, but we'll crack on with that pretty quickly. Near-term production, so our sort of aggressive target, there's a couple of things we need to do at Burton, mainly around refurbing the wash plant, getting that back into shape, and also around a final void plan but we think within 12 months or so we can be producing coal out of that. We are aiming to, and even prior to this, aiming to get Broadmeadow East and also Isaac River going quicker than that. So we've got some advanced discussions going, and we've sort of said that publicly with third-party infrastructure providers using other wash plants. Yeah, that'll potentially get us going within 6 months. It's a material increase to our resource as well, and it creates a hub for us. So I think we'll come back and talk about this a bit more, but there's a lot of synergies between what we were doing with Broadmeadow East, with Hillalong, with our little Cabra project, and what what this adds to it. It really gives us a centralised hub to process the coal from not only Burton project, also Lenten, Broadmeadow East, which are part of the same complex, but also, as you'll see on a coming map, that we can feed in coal from Hillalong, Cabra, and anything else we manage to pick up around there. Granted mining lease, an EA on Burton, and for Lenten we just need the EPBC federal approval. And we funded it through a $15.4 million equity raising, which included bringing on the Flannery family, Brian and Quentin Flannery, who've got a great track record in coal investing, and former Felix MD Brian Flannery. So great to have him on board as well. There was a rights issue component of that, or there is underway, and that's underwritten by both Brian and Matt Lattimore. Thanks, Anthony. So I think I'll hand over to Gerhard at this point.
Thanks, Nick. Yeah, there's so much to say about this asset. I can probably keep you busy for the rest of the afternoon. But yeah, Burton is such an iconic coking coal mine. I remember back in the old East Coast days in South Africa, we used to import the coal all the way from Australia, haul it up 600 kilometers to Funnabale Park to the coke ovens. It's just great coal in general. A little bit of an overview about the joint venture. I think in 2011, New Hope owned the Lenten project. They invited Formosa in as a 10% joint venture partner, and thereafter they bought the Burton mine from Peabody. Formosa is a great company to work with and excellent potential joint venture partner, and we look forward to working with them. Overall, the mine is in care and maintenance since about 2016. After the joint venture acquired the assets, they spent a lot of money and effort on further drilling, further defining the coal quality, and also on getting it operational ready, with a lot of work being done on the capital assessment to get that into production. Where we are now, we've got 3 open targets on Burton, Ellensfield South, Plumtree North, and then Isaac there in the north, and then Lenten just adjacent to that. The infrastructure, a little bit more about the infrastructure. It's a 400 ton per hour module plant that can give you a theoretical capacity of roughly 5.5 million tons per annum. There's a 350 room accommodation village, offices, haul roads, basically a complete mine. And I think there's a replacement value put to it of roughly about 300 million, like Nick mentioned, in 2017. I think it's a little bit more today. Overall, a really great acquisition for Bowen. Like I said, the development cost to get it up and running again, we have estimated on a really high level of confidence through our consultants, $39 million for the first year, and then on this to get the first module going, and then on the second module a further roughly 18 million on that. The coal type, it's a typical high quality coking coal, split 60-40. The brand is known all over the world. We're targeting exactly the same seams. The Leichhardt and the Vermont seams extensively mined in the area and has been by this specific mine in the past. The approvals, granted mining leases, granted EAs, and on Lenten, we still need to get the EPBC approval, and the first year of expenditure has been included in that 39 million for the capital. Good, next slide. Where the asset's location, it's in the premium part of the basin, basically between Glencore, Hale Creek in the north, and in the south you can see there Isaac Plains, Cabra down. So there's roughly a 70-kilometer ballpark area where this is a key piece of infrastructure. So I've spoken about the open pit resources. There's also potential upside. If you see that lighter shaded areas, that could be potential underground targets. There's even some more open pit targets we would like to target a bit later on in the north. But it's important to see where Broadmeadow East sits in this whole map. It's approximate to this, and in one of the later slides I referred to that this will become the new Burton hub to include Broadmeadow East. And if Broadmeadow East can generate significant amounts of cash up front for us to help with the funding of this project. Good, next slide. I think we're going to talk a little bit more about the development strategy. Basically, there's a couple of hurdles we still need to jump over, but the critical path is to get that residual void plan in place so we can start opening up the Burton pits. We're not going to reinvent the wheel on that. We're not going to start from scratch. We're going to build on the great work that New Hope has done to date on that, and to make that happen as soon as possible. But I guess the big takeout from this slide for me is if you look at this new hub that we are creating up here in the north, you can see there's our Hillalong project in the north, Cabra project, then obviously Broadmeadow East. All of these projects can feed into the Burton infrastructure. And infrastructure is expensive exercise. We've got literally a complete mine standing there. I'll talk about the assets a little bit later. We've had some questions on the funding. I think we've appointed Grant Samuel to do a full funding process, assessing all these options for us, and that will kick off very shortly. There's various options. Since we announced the transaction, we had a couple of approaches, but we'll take the best decision in the interest of all our shareholders. Right, next slide. Where does this asset fit into our M&A strategy? To put it in simple words, we've always said that we will only acquire assets if it is complementary to our existing assets, or it will get us into production quicker than our existing assets. So if we test this acquisition against that statement or that policy, against the key parameters for that, the commodity, it ticks all the boxes. It's coking coal. The location is slap bang in the middle between Hillalong and Broadmeadow East. It just creates that infrastructure synergy. The project stage, it's almost development ready. Minor approvals outstanding, and we're chasing that really hard at the moment. And the size, just the sheer size of it, I think we're going to talk about that on the next slide. It's 5.5 million tons of ROM we can process through this facility. That's a big mine. Talking about the mine plan, the margin ranking exercise, I'll talk about it a little bit later on, but typically between 9 and 11 years. And why that's important, because prices are cyclical, and you need to get through those ups and downs to make sure that you've got a long enough mine life there. Historic operation, like I said, this is an iconic mine, and it had uninterrupted production for 18 years plus, producing some of the best coal around. Good, next slide. I think we skipped over one, Anthony. All right. I think not only does this acquisition materially enhances BCB's portfolio, it totally transforms our portfolio. It takes us now to attributable resource tons of more than 500 million tons, of which most of it is in measured and indicated. And if you compare that to some of our competitors out there, this is really a high quality resource. If you consider the amount of confidence in there, to have such a high ratio of measured and indicated tons in there. We have spoken about Burton and Lenten. If you allow me time, I can probably talk another half an hour about that. But I think I want to talk about the concept of creating the Burton complex. If you look at pulling in Broadmeadow East with that in that whole northern hub environment, it just creates so much synergies for us. And I think it's also clear if you look at this map, we've got two distinct areas with close to infrastructure, the northern one targeting the DBCT coal terminal at Mackay, and the southern hub targeting exports through Gladstone. What we Broadmeadow East, we've spoken about that, 33 million tons. We've published the target for that. We can probably take roughly 1 million odd ROM out of that per year, and it's still got some upside potential in a potential underground resource, which we will also be investigating. But that all culminates into the northern hub. Then our Isaac River project, it's an open cut. It's a small open cut to start with, but it's exceptional coal and it can generate good cash for us. So it's important to stay on top of those EA applications to get that permits as soon as we can. Then Hillalong, referred to by some as the sleeping giant. Our exploration is going really well. You probably have seen the latest announcement on Hillalong exploration, where we found that 9-meter thick coal seam at 30 meters deep. In coal terms, or in gold terms, you'll call it bonanza grades. That's exactly what it is. It's an exceptional find for us. The coal quality analysis underway, and I think the significance of that is also that it's previously we couldn't declare a JORC resource over Hillalong South, and that will potentially now alleviate that risk for us, and we can do that. Okay, and then Karura, which is an underground deposit, later on in our development pipeline. It's exceptional coal. It's got a potential to wash a 3.5% ash, CSN 9 coking coal, which is some of the best I've seen, some of the lowest in Bowen Basin in any case. But it is a project that will require more capital from us, and therefore, if we can start to generate more cash from our own operations, it will make funding of that project much easier. Good stuff. And before we move on, don't forget about Bluff. We've made a little insert there at the bottom to say that just remember Bluff can also add to this portfolio and help us to generate significant to increase our production volume and generate cash from that should we be successful in that. Good, next slide. I think this is talking more about the potential production targets and the mining, the mine life. But just to be clear, this is based on the margin ranking exercise to support our JORC reserves and production statements. This doesn't mean we cannot accelerate this program or increase the production rates, especially when you're running high price environments like we're currently seeing. So I just wanted to make that clear. So looking at Burton Lenten, mine life of 9 to 11 years, Broadmeadow East will most likely be run in parallel with that. Isaac River 4 to 5 years. To sum it up, it's more than 5 million tons per annum that we will be mining, and putting that on the train close to 4 million tons per annum. And that is excluding Bluff at this stage. Good. If you look at the FOB cost, that's well and truly in the ballpark. It's looking where the prices are today. These projects can throw significant amounts of cash. So yeah, I'm extremely excited about this acquisition and where we're heading with the company. Thanks, Nick. Over to you.
Thanks, Gerhard. Yeah, look, I think we've probably covered a lot of this, but I'm sure you get the sense that we've sort of made a step change in what we're looking to achieve here in Bowen. You know, I think fair to say we set out with pretty high aspirations, and you know, this is sort of a step on the road for us. It's probably not the end game, but gets us to a point where we're comfortably going to be sort of a meaningful producer. So with Burton, with the infrastructure, with all the other surrounding deposits, you know, getting into production in the next 12 months, yeah, that's going to be quite a step for us as a company. I think, yeah, look, I share your enthusiasm, Gerhard, about Bluff as well. That's a really interesting little deposit for us. When I say little, it's I think it's approved to run at about 1.8 million tonnes a year. It hasn't run at that in the past, but yeah, that'll be a good little addition to us in that southern hub as well. I'm going to flick to the next slide, Anthony. Yeah, so just sort of trying to put this in a bit of order, I guess, in terms of where we are. We're pretty close, or we are pretty close to production on Broadmeadow East and that and Isaac River, expecting, you know, all going well, expecting approvals to be finalised by the end of this year, and to be mining both of those in the first half of next year. This is sort of hasn't changed that in any sense, but has just added additional volumes and additional infrastructure to the whole story. So that Burton mine, Lenten project now sit in that Burton complex with Broadmeadow East, and it's great to be in charge of our own destiny there, really, in terms of having our own infrastructure. So, you know, we're happy to get started as quickly as we can using third-party wash plants and rail loops, but ultimately, you know, this is a lot of the importance of this is that we then become, you know, in charge of our own destiny. So, you know, regardless if the coal price continues to run, we can still be sure we can get the stuff out to market. Yeah, sitting behind that, as Gerhard mentioned, Hillalong, Karura, and yeah, look, Bluff, I think potentially could be turned on very quickly. We're just working through that at the moment, and we'll have a bit more to say about that, you know, in a month's time or so. But that could be a very sort of rapid addition to our tonnage as well. Thanks, Anthony. Look, I'm sure some of you, or most of you, follow the coking coal market. Obviously, steel prices are very high, record highs at the moment. Prices of coking coal have recovered significantly. I think this morning we hit 220 US for prime low vol Queensland coking coal. Thermals sort of followed it up as well, and all of these indices are very high. So PCI at sort of 155 or so US. So as Gerhard says, you convert that into Aussie dollars, start to look at our cost base, you know, do the rough maths on the tonnages, and you can sort of get a sense for what you know, what these will throw off in cash in the current market. We're not at record highs in terms of coking coal prices, but certainly healthy time of the market. I think you know, on average over the last 13 years or so, we've probably seen about 163, 165 US hard coking coal price, prime low vol. So we're sort of north of that today, and a great market to be opening up these assets in. We can talk more about this, but I think, you know, the whole China disruption and obviously not taking any of our product was an issue, sort of holding the market back, but that's all largely worked through, although as you'll see in there that the Chinese are still paying sort of $100 more for their domestic coal and imports out of the places they are buying from than the rest of the world is buying ours for. So there's still potentially some upside in that. We're very bullish about the near-term and the long-term fundamentals of the met coal market. You know, steel demand is growing and is forecast to continue to grow, and you know, we think this will play an important role in all of that as a key you know, critical mineral raw ingredient for steel. Okay, next slide, please. Yeah, so I guess just in summary, we've got a great portfolio of assets. We're looking to continue to build that. I mean, I think we'll certainly, you know, bed these down, and we've got the right people to do that. But I think the opportunity is too good at the moment with you know, some of the pieces of the puzzle in the Bowen Basin shifting, and some of the big guys, you know, looking to exit for various reasons. So we are very kind of mindful of that, and certainly looking to grow this business into a significant met coal export player. We've got some great resources, great projects, yeah, supportive market fundamentals, great demand, lack of supply really as the other thing, I suppose. You know, it's just getting harder in other jurisdictions. You're seeing mines in Canada getting you know, approvals not granted, and I think the Bowen Basin is perhaps not unique, but certainly a bit special in terms of not only the quality of the coal, the size of the market, and its share of the seaborne market, but also the fact that it's so sort of fundamental to Queensland and to Australia, and you know, we're spitting out $4 billion of royalties, and it's very important. So it's taken very important by all levels, very seriously by all levels of government. Got a great team, great partners, I say Sumitomo, and now we're coming into a relationship with Formosa, and really looking forward to that. We've been dealing closely with those guys over the last period of time, and a clear growth strategy. So yeah, very excited about all of that. Thanks, Anthony.
Excellent. Thanks a lot for that. Thanks, Nick. Thanks, Gerhard, again. Great presentations again. And now moving on to the Q&A. So had quite a few questions come in. Thanks very much, everyone, for the questions, and some submitted also prior to the event. So I guess first one maybe more broad for Nick. Nick, a lot of talk about met coal right now, the future of metallurgical and coking coal. How are you seeing the market for met coal in the future, I guess, given what's happening lately? Are you still seeing a bright outlook for met coal and, I guess, for Bowen?
Yeah, look, absolutely we are. I guess we're very bullish on met coal, you know, near term, mid term, and long term. And I think, as I say, that's driven as much by sort of a lack of supply as anything. So there's not a lot of new projects getting approved, and the existing mines are just getting older and deeper, and you know, the economics are getting more challenging. So that creates a great opportunity for people like us to come in and you know, restart some of these mines and get our new projects going. In terms of demand, and let's not neglect that either. I mean, steel demand is growing very strongly at the moment, you know, driven out of China, but also in the rest of the world recovering from COVID. And I think there'll be more of that with infrastructure spends and you know, pump priming generally in economies around the world. You know, I think if you look at the forecasts, you know, some of the credible forecasts are forecasting 30–40% growth, some even more, in sort of steel market by 2050. Yeah, there's a lot going on in that space. Obviously, there's a lot of you know, a lot of energy transition talk, which is going to just require a lot more resources, including steel, and it's going to require met coal. So yeah, look, absolutely very bullish on the outlook for met coal and the role we can play in that.
Excellent, thanks, Nick. More questions coming in. So some have been submitted earlier. One, perhaps either for Nick or for Gerhard, is how confident are you with the capital costs for the infrastructure overhauls, Kurlong, TLO, the CHPP, etc.? Maybe one for Gerhard to answer.
Yep, I'll take that one. Yes, I think we're very confident in the work that Gerhard has done today. As part of our due diligence, we also reviewed that. We've got credible companies looking at that for us. And the accuracy level of those studies have been stated at -5%, +20%. And just looking at the amount of detail that the guys have gone through, I'm fairly confident that those numbers are or pretty close.
Excellent. Thanks, Gerhard. Maybe one for Nick now. Question here about hydrogen. How do you foresee any challenges from hydrogen energy used in steel, in iron ore reduction process instead of using coal? Any thoughts on that?
I'm having trouble hearing now.
Nick, we got you back there again?
Yeah, I think so. It seems to be an internet issue. Apologies.
Yep, just on hydrogen, Nick, any thoughts on hydrogen, whether that's going to impact at all? Talk about use of hydrogen in making steel in iron ore production.
Yeah, sure. Look, good question. I think, look, whilst there's a lot of good work going on in terms of that and other alternatives for met coal, you know, there's a lot. At the moment, certainly, it's not. It's nowhere near economically, you know, justifiable. I think, you know, green hydrogen prices they talk about need to get to $2 a kilo. At the moment, you're talking sort of 7, 8 or north, and that gives you parity with about $300 US coking coal. So, which is a great coking coal price. So I think, look, there's a lot economically to go through before that's any sort of threat, credible threat to met coal. I think, secondly, you know, you've got the incumbency factor. So most of these blast furnaces using iron ore and coking coal are not they're not very old. I mean, particularly in China, which has had this huge growth spurt. So I think the average age of a blast furnace is 13 years, and that's, you know, it's a huge capital exercise, obviously, to replace all of that with a new technology that at the moment is not proven and has a lot of work to do. And then there's other issues with hydrogen around safety and transport and everything else. So there's a lot of work to be done to make hydrogen, you know, even close to a credible alternative to met coal. We don't see it. I don't see it in the midterm. I don't even actually, frankly, see it in the long term. I think it'll be, you know, there'll be other ways that you know, these issues will be tackled. So yeah, look, we don't see hydrogen as a great threat to the met coal market, and yeah, we're happy to continue to aggregate assets in met coal.
Thanks, Nick. And one here about the acquisitions. Will any of the issued shares have escrow regarding New Hope? I guess that's the acquisition. So maybe for Nick again.
I'll take it, Nick.
Okay.
Yep. Yes, shares will be escrowed. If we go down that route to issue shares to New Hope, if we decide to issue shares instead of paying it out in cash, yeah, that's statutory. ASX will impose escrow on those shares. But we have already discussed that with New Hope as well.
Okay, thanks, Gerhard. Questions now coming in. So one here about the mine fundamentals. Have the mine fundamentals or financials changed much from the Peabody days through New Hope ownership and now under Bowen? Maybe for Gerhard.
I think you can just repeat that. I didn't hear it very well.
Yep. So the question here about the mine fundamentals. Have the fundamentals or financials changed much from Peabody days through New Hope and now onto Bowen?
I think there's a significant amount of work that's been done by New Hope after they acquired the assets. Lots of drilling that's been done, much more quality modeling that's been done, looking at alternative ways to mine the deposit, splitting up the seam, washing seam separate, or certain sections of the seam separate. So there's a big change to how we look at it from how the previous owners looked at it.
Okay, thanks, Gerhard. One here about rail capacity. Does Burton come with any take-or-pay commitments on rail?
No, the transaction at this stage does not come with any take or pay commitments for Island Port. We are obviously at this stage in advanced discussions with several parties to have Island Port commitment, but it's something that you only commit to the right time once you have completed the transaction.
Okay, thanks, Gerhard. And looking at more questions now. Does the void plan need to be approved for the wash plant to restart?
So, sorry, Anthony, just repeat that.
The final void plan, Gerhard.
Okay.
I think the answer is no. We can start up the wash plant and start that work and the refurb without having the final void plan
Absolutely
approved for the mining. Yeah.
Yes, absolutely. Yes, the final void plan's on the critical path for us now, and we'll jump onto that as soon as possible to start doing that work. But in the meantime, we can proceed with the other work. Yep.
Okay, thanks, guys. And another one here about the target for production. Is a target for around 5 million tonnes per annum ROM by June or December 2024?
It's probably somewhere between June and December. It can be earlier, depending on our permitting and if we are going to complete the Bluff transaction, because Bluff can obviously feed into that and add to that target. But generally, like I said previously, remember those are the guidelines or the margin ranking outcomes to prove up the production targets and the reserves. In a high price environment, we can pull that forward and produce more to get to that target, maybe even sooner if we have the facilities here.
Okay, thank you.
Yeah, I think that's a really good point. Sorry, Anthony, can I just add to that? I think that's a fabulous point, is that, I think the coal price assumption that went into the margin ranking model, depending on the model, was somewhere around 140 to 150 US. We're currently sitting at 220. There's a lot more coal in the ground in these things. The raw resources are very large. And so, yeah, absolutely, we'll be targeting that to go further down dip, increase production. So, in current coal price environment, this is a fairly modest aspiration to get to 5 million tonnes of ROM out of those projects.
Absolutely, especially if you've got the capacity here.
Thanks, guys. Sorry, more questions coming in. So sorry to rush you along. So, question here: despite the strong fundamentals around met coal, how will Bowen convert your position into share price growth where others have struggled? So I guess, yeah, from Nick.
Sorry, say that again. Sorry.
Yep. So despite the strong fundamentals around met coal, how will you convert your position into share price growth, I guess, where others have struggled?
Yeah, it's an interesting question. I think, look, at one level, we're sort of very focused on getting the assets going and getting the cash to spin out, and then I think from there, if the market hasn't picked it up by then we'll just be hopefully spitting out dividends at that point in time. We'll obviously work very hard though in the market to make sure it's well understood. I think certainly in past cycles, my experience has been that it takes a while to get the message through. I think we've made a transformational acquisition. Now you'll find hopefully the brokers will start writing research, and we'll do some of that ourselves and start talking about what this looks like in a financial sense. People start to understand how big this thing is and how much cash it can throw out, and then I think that will be part of our job then, is to really sell that hard in the market. So we've been sort of head down bum up, I suppose, Anthony, trying to get these deals done and over the line, but recognizing that absolutely now we're in a situation where we'll be going out and sort of singing from the rooftops to get the message out there. And I would say that there are other comparable companies or other companies around that that have done this successfully recently too. Allegiance has had some very strong growth in its share price. So yeah, it's not as though I think the stock market, the listed market, is dead for coal companies. I don't think that's the case at all. I think that happens when the coal price is down, but once it recovers, people get excited about it again, and that's what we'll hopefully see in this case.
Great answer, Nick. Great answer. More questions coming in, so try to rush you guys on these. Now, maybe for Gerhard, perhaps, operational philosophy for the Burton Lenten operation. Are you looking at owner-operator or contract miner? Any discussions with any players to determine your cost arrangements?
I think we will look at a contractor type operation. It just makes sense for us to manage the capital requirements to get this up and running. So the focus will be around contractor, and it's a transition process. You'll go through the process, and who knows, a couple of years down the line we might change that philosophy, but at this stage it is contractor operated. Yeah.
Excellent. Thanks, Gerhard. Yeah. Now, Nick,
I was just going to say, I think that philosophy that underpins us, where our business is about owning met coal mines and marketing coal. We'll take a kind of a sensible commercial approach in case by case on contractor versus owner mining, but certainly to get started, we'll be, we don't need to be mining it ourselves. We're happy to bring an experienced contractor in to do that.
Thanks, guys. Another one here about thermal coal. So, given there is a fair proportion of thermal coal in your portfolio, what's your view on the future of thermal coal? Maybe for Nick.
Yeah, well, I'm actually reasonably bullish on that as well. Actually, I think that any transition is going to take a long period of time, and we've got to keep the lights on in the meantime. So, you're still seeing a lot of new thermal power stations being built, not in Western countries, but in China and funded out of China in third world countries. So, I guess I take the view that this is some of the best thermal coal around. Lower emissions, lower impurities, and it's not our focus. Our focus is definitely coking coal, but some of these assets you get a bit of both. So you get a bit of a thermal coal byproduct, if you like, or in the mix. So look, we're comfortable.
Losing Nick. Gerhard, you still there?
Not sure what the price is today, but it's been sort of 150 up to 160.
Okay, guys, thank you. I just did a volume audio issues there. Dividend reinvestment plan. When were you? this may be an early question, but are you planning a dividend reinvestment plan, and when will you start paying dividends? Perhaps Gerhard.
Yeah, that's probably one for Daryl, but no, at this stage I think it's a bit early to talk about dividends. We need to get into production first, and that's our priority. We need to get into production, start generating cash, and then we will start to talk about dividends. At this stage, it's all about.
But it's certainly fair to say, Gerhard, it's certainly our aspiration. I think.
Absolutely.
Yeah, it certainly is our aspiration. I think these things, as I say, can throw out a lot of cash. If you look at what happened in Stanmore, they started paying dividends once the cash started to flow. So, we'll be sensible and prudent about that, but definitely keen to return some money to shareholders as quickly as we can. Absolutely. Dividend reinvestment plan, not sure yet. Haven't landed on that.
Yeah. Excellent. Thank you for that. Yes, probably a bit early for that, but who knows down the track. Another one here about SPP. Has the SPP been discussed already today? Perhaps Gerhard or Nick?
Yeah, I think you mean the share purchase plan. We've got a rights issue attached to the placement. So, so that's, I think, 5.4 million in rights issue, 1 for 12. 6.7 cents. So yeah, that's, I think we've gone X rights now, and so yeah, those are on the register as of yesterday. We'll be able to take up those rights.
Excellent. Another question here about that rights issue. Is it based on your original shareholding or include the amounts picked up in recent capital raisings? Like you said, I guess it's based on yesterday's, if you're on record yesterday, right? Yep. Okay. Okay, thank you. We've got about 10 minutes left, so we've still got time for more questions. If anyone else wants to come in with more questions, please fire them in, because we only have a little bit of time left. In the meantime, perhaps I'll look at some other questions that have come in previously. Maybe on to back to Nick again. Oh no, there's more questions coming in here. Okay, let's have a look here. Not sure if this is Nick or Gerhard, but are all the coal resources Wrangell measures?
Yep, I'll take that one. Yes, the coal resources in Burton and Lenten, it's all in the Wrangell's coal measures. We have said in the announcement that we have excluded some seams previously included from some of the Fort Cooper measures, the Gira seam, which we have excluded now. So it's all Wrangell's coal measures, yeah.
Okay, thanks, Gerhard, for clearing that up. More questions coming in. Anything more on the Bluff mine? Can you talk more about Bluff? Will that change your project priorities or redirect capital? Nick, we need to get you on the phone, man.
Sorry, is that better? I'll kick off and then Gerhard can step in as required. But yeah, look, I think Bluff, as I say, could change, well, enhance our priority, I suppose, in the sense that, you know, that could be a very rapid restart. You know, there's a pit there already. We just need to find the right equipment and probably a contractor to do that. Yeah, so I think it could happen pretty quickly. It doesn't really require a lot of capital, as in, you know, it's already there. It's washed out currently, or previously been washed out through a third-party infrastructure as well. So yeah, I think that can be a very rapid, low capital startup without a lot of money for us to tip into it at all.
Excellent.
Yes, absolutely. I agree with you, Nick, that basically the pit is there. The opportunities are there just to jump in and just go on with the mining process. I think, unfortunate for previous owners, it was a function of where the price were at that stage. When they commenced production, it was in a fairly $90 off the ton, and it just got impacted by the prices. So where the prices are now, it's obviously a very viable project.
Excellent, excellent. Thank you. More questions coming in. So, okay, thermal coal, met coal. What would be the ratio between thermal met once you're in production?
For Burton and Lenten, we're roughly about 60-40. There's obviously a lot of washability studies that's being done to maximize the ultimate dollar return in this. It could mean that we change the ratio depending on where the market is. And luckily, this is a really good coal that gives us that flexibility on how we wash the coking fraction, which will determine the secondary thermal coal for that, and big impacts on yields. So we'll monitor it close to the market conditions to make sure we maximize revenue. That's our strategy.
Excellent. Yeah, so fair to say Burton Lenten is 60 met, 40 thermal, but some of the other projects, you know, Bluff is PCI, so 100% metallurgical coal. Isaac River is 100% metallurgical coal, you know, hard coking coal and a PCI secondary. So yeah, that's certainly our focus. And as an overall percentage, I mean, I haven't got the maths in front of me, but you know, will be vast majority of our production will be met coal.
Absolutely.
Excellent, thank you, sirs. Now another one here about the marketing rights. Marketing rights to M Resources why are you giving marketing rights to M Resources rather than marketing 100% yourselves?
Sorry, Gerhard, let me try and you step in. But I think, you know, marketing is a I don't want to call it a black art, but it's certainly, you need to know your way around the market. Look, Matt is the best guy. I mean, we worked with him extensively. I worked with him. He came on the register at Stanmore. We did some work, you know, before I joined Bowen. It's all about relationships, you know, globally with the steelmakers. And, you know, we recognize that we're not, you know, while we have good relationships, it's a different sort of level of depth that you require to do that. So, you know, we're very, very pleased to be going 50-50 with Matt in this joint venture. I think there's a lot of value we can create for us out of all of that.
Yeah, I can add to that. I think basically what we said from the beginning, a lot of the smaller companies will vend out their marketing rights. We decided no. We took a different approach. Instead of giving those rights away, we went into the 50-50 joint venture with Matt, and we got M Resources to manage that joint venture on our behalf. So we retained all the smarts to ensure we get the best price around. So I think that's a great model for us.
Yeah, it's such a critical value add to the business, Anthony. So, you know, there's so much value you can create out of that, getting that right, and it's crucial that we've got the best guys in the room to do that, and that's what we've done with Matt and M Resources.
Hey, I can't argue about marketing. So next one is target markets. What are your target markets for the coal? Given the situation with China, are you looking at India, EU? Where are you looking for your export markets?
Yeah, I think typically this coal, you know, goes well into North Asia, Japan, Korea, but also will go into India and other markets. So, yeah, look, there's plenty of good markets for us to sell this coal into for sure.
Excellent, thank you. Another question here about price discount. Price discount for PLV for Burton. Is there a price discount to PLV for Burton coking coal?
I'll take that. Yes, there's a discount to PLV, obviously, because PLV is determined for your typical deep downs mined area. So there's always adjustments to that. So that discount will be subject to our M Resources marketing profile, or how we're going to market this coal. So at this stage, no, we're not going to assume a massive discount, but there will be a discount.
Okay, thank you. And another one about water, probably for Gerhard again. Is there sufficient water in the Burton Lenten area to allow for CHP operation, or would you need to buy water from a third party like Sunwater, etc.?
No, I think this is one of the big positives of the Burton acquisition as well. So part of the acquisition is access to the water, the Teviot reservoirs in there as well. It's got a massive holding capacity of, I think, 25, 26 gigalitres. All the water infrastructure is there, so we are not reliant on third-party access to water.
Excellent. Well, we have about 2 minutes left. Any last questions from anyone on the line? Now's your chance. Otherwise, I might just go to Nick and go outlook question. Nick, you've had a great start to life with Bowen. How do you see the rest of 2021?
What was that, sorry?
You've had a great start at Bowen. How are you seeing the rest of 2021?
Yeah, I don't know, Gerhard, should we buy anything else? Probably should just pause for a minute, I think, and bed this stuff down. But look, there's always stuff around for us to do. Yeah, I think we've all been pretty busy, but good busy, getting all this bedded down. So I think, look, the important thing for us is very clear on our strategy. It's a growth strategy. And I think, you know, what we've learned across the different operations we've been involved in is, you know, now we need to execute that right. So, you know, it's the right people. It's all about having the right people who we already have, but there'll be, you know, 1 or 2 additions we'll need to bring in to absolutely execute, you know, as low cost as possible. It's lovely to be in a very frothy met coal market, but we need to kind of prepare this business for all stages of the cycle. So we'll be making sure we carve every dollar out and make sure we operate as efficiently as we possibly can. So look, it's exciting times. I think, you know, this gives us a platform that we wanted to get to, where we're now a meaningful producer in a sort of a global sense. And that's really a platform we can then build on, you know, as we bed this down, and look to continue to sort of grow with the right opportunities. As Gerhard says, we're very selective about what we will acquire. We're not just acquiring things that, you know, for the sake of growth. We're not doing that. We're really looking to make strategic acquisitions that make sense for us and that we can wring value out of.
Excellent. Thanks, Nick. Well, it's 1 o'clock. So thanks everyone again for your time today. Great having you all on the line. Thanks, Nick. Thanks, Gerhard. Thanks, Daryl, in the background there as well. Appreciate your time. Again, there's a recording being made, so if you missed anything today, you can watch it again later. Any questions we missed, please go to the website and send us an email. And again, if you're not already subscribing, please subscribe to our announcements via the website. We're on Twitter, we're on LinkedIn, so you can contact us on those channels as well. And thanks again, and have a great day. Thank you. Cheers, guys.
Thanks, Anthony.
Thanks, bye.